Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Tuesday, March the 8th, 2016, and this is the daily report for gold and silver. We do have the precious metals complex trading lower on the day. Gold currently off between $3 and $4, trading roughly at $12.63. The high today has been $12.78 and change. The low on the day has been $12.60. So as you can see, we are much closer to the lows of the day than the highs. Silver also trading lower on the day. Now look at the net change. It's off about 1 1/3%. Contrast that to gold, which is off about 1/3%. Gold trading at $15.40 on the day. Palladium and platinum also under pressure, down about almost 2% in platinum at $9.84, down really $17.5. And so we do see some real pressure in the precious metals markets, along with crude, which is also trading lower on the day. So traders, with there being some pressure in the precious metals complex today, what's really important to us, of course, is what gold is doing and how it affects our current position. Now, obviously, we are long gold. We're long roughly at 12.17. That's this blue line that I've just added. As this market moved up, we did, in fact, continually trail our stops up, this being 12.40 right here. Our stops are currently above 12.40, just below 12.45. And the reason for putting it in that particular area or at that price point was to go under this particular low that we got a few days ago. Now, this is a half a day chart, so you get 2 candles per day. And obviously, when we take a look at what we're witnessing right now, we do have some real resistance roughly at 1280. You can see that in these tops that we have right here. We also can say that we have some support at about 1260 in the market. We can see that by these lows that came in here. Now, this particular chart that I've put up is a model that we were working with that has some strong potential of unfolding in the way that this model is predicating or predicting that it will. And in essence, it's a very, very short-term model that's looking at this breakout that came in really at the end of last year when we hit these lows at about 1040 as a wave 1. We had our wave 2, and this wave 2 was actually a 61% retracement, if you recall. So that really fell within the parameters of the model. Then this long extended wave 3 is actually a 261% extension of A, which is an elongated and an extended rally. There's no doubt about this. And then when the market came down, these lows that come in right here are actually a 38% retracement. So when we first looked at this market unfolding back in this area here, when it came down, I thought that we probably had completed our wave 4, wave 3 up, our wave 4 down, and we were now in a wave 5. However, that is not how it unfolded. And what I believe to be the best model now is that our wave 4 was basically a consolidation fourth, and this breakout that we got was roughly the beginning of a wave 5, a final wave 5. This, of course, is a sub count behind an intermediate count. So these are very, very short-term moves. But what I've done is I've basically plotted an extension of wave 1 once again, because wave 1 will be your benchmark for wave 2, wave 3, and wave 5. Of course, wave 4, we use wave 3. So when we look at our move in wave 3 and we have a retracement, that retracement, of course, is referring to a retracement of wave 3. But wave 4 is typically, wave 5 is typically equal to or slightly greater than wave 1. And that would take us roughly to about 1292. Now, as you know, I have been under the belief and the assumption that we could see this market track as high as about 1300, and at that point we will look for some sort of correction in the market. However, what we have seen lately is really this real resistance at around 1280. We do have our stops, as I said, at around 1245. And so what I'm looking to do right now is to move your stops under 1260. It would be a very, very tight stop, putting it at around 1255 in that area, so that if this market has run out of steam. And if what we're looking at here is simply the conclusion of our fifth wave on the subcount, it gets us out with a little bit more profit than if we keep our stop in at 1245, below 1245, and the market moves and hits our stop. So I'm trying to determine what is our best bet here. Will we see this market find a little bit of support and clip up? I don't really think that we're going to see a tremendous move to the upside at this point on this particular wave. And so for that reason, I believe that it would be a prudent move to tighten your stop to below 1255. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update review. Bye-bye.